This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. Today is Wednesday, June 25th, 2008. Well, the Fed has done it again. The dollar was hung out to dry at $2.15 this afternoon with the official FOMC statement. The Federal Reserve certainly isn't trying to damage the dollar, but in telling the truth, it is doing just that. Almost nobody expected the Fed would hike interest rates today from 2%, but many market participants were hoping for a solid indication of a rate hike at one of the next two meetings. The statement included comments about growth and inflation, but sounded almost balanced. The committee expects that inflation will slow in coming months, but also sees high uncertainty about that. Downside risks to growth also exist, but have diminished. There was one dissenting vote for a rate hike, but that's hardly enough for us to believe the Fed is doing anything but jawboning. The markets clearly see through it as interest rate futures back off and the dollar sags lower. Technically, this could be a very important day. For example, a closing price above 156.50 on euro dollar would open the door to 158 and quite possibly 160. And why shouldn't the euro run back there? The ECB has all but flat out told us to expect a rate hike at next month's meeting. Most investors believe we will see 2 or 3 hikes by March. Bill Gross, who manages the biggest bond fund in the world, today after the meeting said he expects rates will remain unchanged through the end of 2008 in the U.S. We tend to believe he is right, given how fragile financial markets still appear. On the other hand, some stock traders would like to see some support for the dollar, which in turn should help bring oil prices down. It seems the consensus after the decision is that the Fed should hike soon, but probably won't. Only time will tell. Meanwhile, pay attention to just how weak the dollar ends today as a signal of whether the selling will continue in tonight's Asian and European sessions. Till tomorrow, have a great night. Take care.